What's going on, traders? We got a jam-packed video. You're not going to miss this. But before we get into it, like, subscribe, comment your thoughts below. Let's get into the video. So right now we are looking at the triple Q's monthly time frame. I know it's been a while since we looked at a monthly time frame, but I want you guys to lock in because this is where things get very interesting. Okay, so again, we're looking at the monthly time frame, and you guys see it, I see it. We're looking at a rising wedge pattern on the monthly frame. You got your rejection here, your rejection here, you bounced here, you bounced here, so on and so forth. You guys get the idea. And then there's this very long wick. Hopefully you guys can see it right here, where you pretty much wicked all the way down and then you ended up recovering. So from here, what are we looking at? I do think we're going to see one more bounce. I do think there is potential for a dead cat bounce from here. We go down to the daily time frame. I know it looks bad, but I think this was a bear trap. Okay, and I'm going to tell you guys why, or show you guys why in a bit. But I do think this was a bear trap, but you guys see it clear as day. There is a rising wedge pattern, and I want to be clear when I say bear trap. It doesn't mean that this bear trap is permanent. It just means it's short term. Okay, I do think it's short term, and I do think we're going to see more downside in the near future. So from here, I do expect some type of bounce heading towards this gap fill all the way towards 510, 508 range before potentially seeing another move down. Okay, so that's what I'm expecting for the beginning of this week. Okay, I do think we're going to see a dead cat bounce from here. Now, if we do decide to head lower, I'm looking at a move towards 485, somewhere around there, 485. Okay, so right where these guys are. Okay, and just in case you're wondering why that particular level, I mean, right here, you just have a lot of resistance, not resistance, support in this area, right? You just have a lot of turbulence, and you guys know we talk about turbulence all the time. So there's a lot to get past here, and the only way I think we're going to get past this 485 level is if we have hideous news. Okay, so if anything, if we do continue to head lower, then I will watch for a move towards 495. 495 being your psych level. Then after that, you're looking at a move towards 492, 490. Lowest I'm looking at is 485. But again, I want to reiterate that I do think we are witnessing, or we witnessed a not a dead cat bounce, a bear trap on Friday. And so from here, I do think we're going to fill this gap, retest the bottom of this rising wedge, and then head further down. So we could be looking at a move towards 510, 508. So why do I think this is a bear trap? And this is why I tell you guys all the time, you need to look at both the futures and ETFs. Okay, you see it here. We're on the NQ daily time frame. We've talked about this dozens of times. This rising wedge pattern, rejection here, rejection here, rejection here, bounce, bounce, bounce. You guys get the idea. And look where we are. We have yet to again to get past or stop these guys out of their position and get past this area of turbulence. We talked about this so many times, where we really need to get past these guys in order for me to be really bearish or extremely bearish in the market. And so again, we closed within the rising wedge on the NQ, and this is why you need to pay attention to both the triple Qs and the NQ, because one may say one thing while the other says something completely different. And this is why I think we witnessed a bear trap on Friday. Now, this isn't the only reason. We're going to go into other reasons why I think it was a bear trap, but I just really want to make it clear to retail traders everywhere, because I witness this all the time, where retail traders only like to focus on the ETFs, and they think that ETFs is going to give them all the information they need. But I'm telling you now, you look at the triple Qs. The triple Qs broke below its rising wedge, right? Clear as day. Okay, broke below it, didn't vake it up, didn't force it or anything, didn't adjust it. It's all the same. Then you go to NQ. NQ is still chilling within its rising wedge, still sitting at this area of turbulence. I told you guys that this area is very tough to get past, and we're going to need very bad news. But not only that, if we're looking at the upside, we're very illiquid up here, very illiquid. So I do imagine that we're going to want to revisit this area, and right now I'm looking at 21,000. So simultaneously, these are the two things that I'm looking for. I want to see triple Qs retest 510 for me to start looking at puts again. And then I want to see the NQ retest this area right here, which is around 21,000, 20,900, somewhere around that range, right? So I would love to see that move before potentially looking at more puts to the downside and just really going heavy. Because if we do see this move, then I do think this is going to be the final pump before we see an actual break and confirm that this rising wedge is actually a rising wedge. Now, what if that doesn't happen? What if we do see more upside? What if we look at new highs all over again? I'm not going to deny that that's very much possible. Okay, so there is two more scenarios here where we either this could be our neckline right here, right at around what 20,490. This could be our neckline. We form some type of double top here at around 21,300, and then we start to break down. Okay, so you will have your top here, another top here. Another scenario is that you retest the top of this zone at around 21,300, possibly head higher, and if we extend the rising wedge, right, it's going to be a little up, but if we extend it, you could be looking at a move towards 21,500, which will be new highs, and then you see a breakdown all over again. So those are your other two scenarios, but right now, until we get some type of confirmation from that point, or if we break above 21,000 and actually hold, okay, so right here, if we break above 21,000, then we can start talking about other scenarios, and of course I will update you guys in other YouTube videos if that just so happens to be the case. And so that's what I'm looking at in regards to the triple Qs and the NQ, and part of the reason why I think Friday we saw a bear trap, because I guarantee a lot of retail traders saw this happen and they didn't look at the NQ and they just said, oh yeah, this is totally going to drop, load up the puts. Okay, so I could be wrong. Okay, I could be wrong and they might be right and they just end up winning. Hats off to you if that's the case. Okay, but I don't think that's going to be the case. We'll see. Okay, so SPY. So we talked about this. We talked about the SPY seeing 585. I told you guys, I warned you guys that this will be the case, and I told you guys that I would love to see the SPY revisit 585 before we see some type of bounce. Now, whether it's a dead cat bounce or a rally, it's really up in the air, but I mean, they can be one and the same or either or. It doesn't necessarily matter to me, but we go to the daily time frame, we zoom out, you guys see we've been trading in this channel for a very long time, right? We rejected here, and then we had our rejection here. This is essentially where we pretty much caught the top, and I told you guys to be careful up here, and then we bounced here, and so we zoom in and we have a much smaller channel, which is our 4-hour channel here, and we not only retested the top of the daily channel that I just showed you guys, but we retested the top of the 4-hour channel, and then we started to roll over back into this channel, and then we started to break down, hit that 585 level. And again, I do imagine that just a lot of retail traders saw what happened on the triple Q's time frame, or triple Q's chart, I should say, and they are probably assuming that the SPY is going to fill this gap all the way down to 577, which could be the case, but the fact that we closed above 585 only tells me that we could be looking at a bounce from this point on, and from here I'm looking at a move towards 590, and after that I'm looking at a move to 592, 593, which is pretty much this gap fill, and then highest we could be looking at, okay, is about 600. Okay, we could retest 600, form some type of double top scenario. Our neckline will be at 585, and then we break further down. If we're talking about new highs, then our new highs will be at around 605, which is pretty much retesting the top of this daily channel all over again. So those are your multiple scenarios we're looking at. First things first, I will pay attention to how the SPY reacts to this gap fill. If we feel this gap and we start to head lower, then we make some type of lower high, then that is a sign that we're going to head further down. So you have your high here, your lower high here, and then you break further down, you break below this channel, and yeah, that's it. Okay, so I do imagine that if we do retest 600, which is a pretty decent amount of way, right? We retest 600, we break down, right? We break below that 585 level, we retest 585 after hitting 577, and then boom, you'll look at a move like that. All right, so that's what I'm looking at in regards to SPY. Those are your possible scenarios for the SPY. I gave you guys bullish scenarios and I gave you guys bearish scenarios. So whichever one you decide to go with is really up to you. So let's talk about stocks and why I think a lot of what happened Friday could led into a potential short-term bear trap, right? So let's talk about Tesla. And so Tesla looks bullish. Okay, it did a Uno reverse. I was pretty sure it was going to head to 295. It didn't do that. It got as low as like 306, 305 after hours, and then from there it just never came back. And so if we're looking at the 4-hour time frame, not even a 4-hour, let's go to the 2-hour. Okay, so the 2-hour time frame, you guys see it here, right? We pretty much broke out of this rising wedge pattern here on the 2-hour time frame, And not only that, but you can argue with me about it. It's up. I don't necessarily care. But again, if it looks like a pattern, assume that it is a pattern until proven otherwise. We have us an inverse head and shoulders pattern. You have your shoulder here, your head here, and another shoulder here. And so I do think Tesla is going to see upside towards 350 if this just so happen to play out. And I mean, look what we're doing. We're mounting the supply and demand zone here. I mean, we're just bouncing back and forth on it. We broke above the rising wedge, so I think this is a clear sign that Tesla wants to break higher. Okay, and the longer this consolidation happens, the bigger the move to the upside. So I would really pay attention to Tesla. I think the downside, at least for now, is over with, especially considering we broke above this rising wedge. I mean, you just have so much confirmation here, guys, that Tesla is wanting to see more upside, especially since we closed above 318 as well. That's just, it's a lot of confirmation, right? Even here on a daily time frame, and we retested this trend. Not only did we retest the supply and demand zone, but we retested this trend here. You rejected here, rejection here, and then look what happened. We went back down, retested the trend, retested the supply and demand zone, and then we are bouncing off of it. We broke back above the supply and demand zone. Not only that, but we broke out of this falling wedge as well. And not only that, not only did we break above this rising wedge, or broke out of this rising wedge, we formed an inverse head and shoulders pattern. So there's just too much math adding up here for me to be bearish on Tesla, at least for now. I do think Tesla is going to revisit 350. Lowest we could talk about is about 340, 335, somewhere around there, but Tesla looks absolutely bullish. So that's another reason why I think we could have seen a bear trap, or witnessed a bear trap happening on Friday. Now, I will say this much: Tesla does tend to do its own thing sometimes and do the opposite of the market. So I wouldn't, you don't have to take this at face value, but it is a confirmation that we could be looking at more upside, or a dead cat bounce come Monday, Tuesday, Wednesday. Okay, so we'll see. And so another stock I want to look at is Apple. So if we go to, yeah, here it is. All right, so looking at let's actually go to the 4-hour time frame here. Okay, so Apple. So you have a symmetrical triangle here. All right, so you have your rejection here, bounce here, and then look what happened here. Okay, let's get rid of this real quick. We'll get back to that. So look what happened here. You broke out, and I mean, this is clean, guys. I'm hoping Apple doesn't gap up, because I kind of want to enter a trade here. But look what happened. You broke out of the symmetrical triangle. You broke down, right? This is when the market was pretty much breaking down. And then you retested the top of the symmetrical triangle, and now you're attempting to bounce from this point on, right? And so if we're looking at the measured move of the symmetrical triangle, and how you would do that if you're new to trading, or just new to patterns in general, you measure the open and close of the symmetrical triangle. You bring the measurement to the breakout point, right? So right here, and you're looking at a measured move all the way to 242. Now I'm not counting on that in regards to Apple. I would lowball it and just take my profit at around 230. Highest I'll be looking at is about 235. But if it hits 242, just know you saw it here first. Okay, so that's what I'm looking at. All right, so Apple looks really bullish. That's another confirmation that we could have seen a dead cat bounce happening on Friday, or not a dead cat bounce, a bear trap happening on Friday. But yeah, that's what I'm looking at in regards to Apple. Apple looks good. If it breaks below this, if it breaks or rolls back into the symmetrical triangle, then I'll be very much cautious. Okay, very cautious, because at that point it could head back down to 222, 220 range. Okay, so that's what I'm looking at in regards to Apple. Nvda. So 140, very tough support. Okay, very tough support. I guess I wouldn't say very tough support. It's pretty, you broke through it a few times, but I do think that bulls are trying their best to hold that 140 level. I mean, you see it here though. You rejected here, you broke through, and then you started to mount here, you broke through, you retest. So you guys get the idea, right? And so we broke below this rising wedge. And so what's interesting about Nvda here is that the measured move for this rising wedge is 135. Okay, 135. But from here, I don't think that's going to happen. I think we're going to retest 150. But this is where things get interesting, guys. If we rally all the way into Nvidia earnings, I would be careful. And keep in mind, I was right about the last earnings. Everybody was bullish. Your favorite YouTubers were bullish about Nvidia earnings, and I think I was probably one of the only few YouTubers who was saying that Nvidia is bearish for earnings. That I don't think Nvidia is going to surprise for earnings, and that's exactly what happened. It dropped for earnings. Okay, you can go look for yourself. The thumbnail says it all. Okay, but I don't think if we do rally, if we rally into Nvidia earnings, which is Wednesday after hours, I will be very, very careful. If we see a move to 150 prior to earnings, I will be careful here because the measured move for this rising wedge is still 135. And in case you don't believe me, you measure the open, you measure the close, you bring it to the breaking point, and there you got 135, guys. 135. Okay, so that's what I would be looking at in regards to Nvidia. I would just be very, very careful here. I mean, you go to the daily time frame, you see it. You go to the weekly time frame. I actually haven't looked at the weekly time frame, but on the weekly, I mean, let's erase everything here. Look at this, guys. Look at this. What is this? That is a dark cloud cover. Okay, a dark cloud cover pattern. In case you need some type of reference, boom. That is a bearish pattern. Now, keep in mind, we're going to stick to what I say. Just because you see a bearish pattern does not mean it has to play out right away. It can take months, it can take days, it can take however long. I mean, you see it here. You had your bearish pattern here, and look what happened before it played out. Bearish pattern here. I mean, you had an bearish engulfing candle and it played out right away. But a lot of times, these patterns do not have to play out right away, guys. Okay, so I will say that much. And here just shows that bears are trying to bring Nvidia down. So I will be very, very careful in regards to Nvidia earnings and really pay attention to how the market reacts prior to Nvidia earnings. Okay, so that's what I have for Nvidia earnings. I think we're going to see a retest of 150. If we break below 140, then we're heading towards 135. So those are your two directions that you should be looking out for in regards to Nvidia. So Bitcoin. So in regards to Bitcoin, let's go to the daily time frame. I think it's the daily time frame. Yeah. So actually 4 hour. So on your 4 hour time frame, you have a symmetrical triangle, right? Not only do you have a symmetrical triangle, but you have somewhat of a hideous inverse head and shoulders pattern. So you have your shoulder here, head here, another shoulder here. And so if this plays out, if Bitcoin does break out of the symmetrical triangle, we could be looking at a move as high as 99K. Me, I'm going to lowball it and say 95K just to be safe, but 99K. Okay, that's what I will be looking out for in regards to Bitcoin. Now, if it breaks below the symmetrical triangle, which I don't think is going to be the case, but I can definitely be wrong here. Definitely be wrong here. If you break below this, then you're pretty much heading back towards 75K at this point. Okay, I don't think it's going to be like a fast deal or anything like that, because I mean, and the reason why I'm saying that, I mean, you look here. Let's actually mark it out. You look here, right? I mean, very illiquid, guys. So I would be careful. Okay, I will be careful with Bitcoin. Me, again, I think it's going to break to the upside, but I can definitely be wrong here. We'll just have to wait and see. The longer this consolidation happens, the bigger the upcoming move is going to be. And so we look at coin real quick. So coin looks absolutely bullish. So this is why Bitcoin, I think Bitcoin is going to break higher. Okay, but coin does have a little bit more upside towards about 325 from here. I mean, this setup just looks absolutely clean. Congratulations to Discord members who traded this setup with me on Friday. Made an absolute killing. We traded coin at like, what was it, 294, 293, somewhere around there, and then from there just went up. We saw what whales were doing. We followed the money, and the money came. All right, so that's what I'm looking at in regards to Bitcoin and coin. I think we're going to see more upside. The highest we're looking at on Bitcoin is about 99K. Lowest I'm looking at, or minimum I'm looking at, is 95K. I don't think we're just going to plow through 100K or anything like that. It's very much possible, but I think that's going to be very, very, very strong resistance. But we'll wait and see what happens. All right, and so Discord member wanted me to go over Coca-Cola, I believe. And so I looked at this chart. Coca-Cola. So one thing's for sure. One thing I will say, this is a great buying opportunity. I mean, this is an excellent buying opportunity. You got so much liquidity to the upside that needs to be grabbed. You got like at least three fair value. I'll say three fair value gaps to the upside that needs to be mitigated. I mean, you just got all. And not only that, but you're pretty much close to supply and demand zone around 61. I mean, if you want to pinpoint accurate target or whatever the case may be, I guess you could look at 61. But I mean, look here, you bounced here, right? You reject it, reject it, reject it, reject it. I mean, we can keep going, guys, but I mean, and then you reject it here, you reject it here. I mean, so this supply and demand zone, I think, is an excellent buying opportunity for Coca Cola. So shout out to the Discord member that called this out. Or wanted me to go over this because this looks beautiful. I already have reoccurring investments into Coca Cola, but I'm probably going to go heavy or add heavy at market open and alert members to do this. So if you're watching this video, be ready at open to definitely invest in around $60-$61 range on Coca-Cola, because I mean, this is a beautiful entry, absolute beautiful entry. So we'll see. Um, and I mean, look at the weekly. Look at that. All of this needs to be mitigated. All of this up here. Not only that, oh, Coca-Cola has earnings. Oh, that's all the way in February. But yeah, Coca-Cola looks good. I mean, I got nothing. I got nothing bad for it. I mean, if it breaks below, I would say if it breaks below 60, then yeah, be careful. But other than that, I mean, if you're looking to trade Coca-Cola, which I don't think you should do, but if you decide to trade Coca-Cola, by all means, then watch for. I would set a tight stop loss at $60, and if it breaks below 60, then yeah, it could head much lower. But I mean, this looks great. So good call on this. That's really all I have for Coca-Cola. I think it's going to bounce from here, given where the market is and the potential for the market to bounce. Meta. So this is what I'm talking about in regards to the final bounce or one more bounce before we see downside, because you got some stocks that want to drop, such as Microsoft and Meta, and they're showing signs that they want to drop, but the market is pretty much holding them hostage. And so you're looking here on a weekly time frame in regards to Meta. You have a bearish engulfing candle, right? And again, these patterns don't have to play out right away, but look what happened every time Meta formed some type of bearish pattern. You dropped almost immediately. And so we could be looking at that move. And this is why I say if we rally into Nvidia earnings might be the reason the market tanks. Okay. I'm like a good 90% sure about that. If we rally, okay, if Nvidia sees 150, if the triple Qs is at like 510, if NQ is at like 21K before Nvidia earnings, we could be it can get ugly. I will say that much. So just be very much careful in regards to Nvidia earnings. TSM, bearish pattern here, but I will say that given what's happening this week or what's coming up this week, and if we're looking at a dead cat bounce, I think TSM is going to retest 200, 205 one more time before we actually drop here. So that's what I have. CrowdStrike. I just remembered off the top of my head. The Discord member wanted me to go over to CrowdStrike. So in regards to CrowdStrike, I didn't actually plot this, so we're just going to wing it here. CrowdStrike doesn't have earnings coming up. Maybe that's why. The 26th of November. So what I will say is that right here at around 324, 323, good buying opportunity for CrowdStrike. But if it just decides to bounce from here, then I would just be careful. Did it fill this gap? If it does bounce from here, then you could be looking at a move to 370. If CrowdStrike, okay, so I will say this: if CrowdStrike bounces and heads higher into earnings, then you might be looking at a drop. Okay, you might be looking at a drop for its earnings. We'll see. Okay, we will definitely see. But 324 is definitely a level I will be looking out for. And then from there, you're looking at this gap fill at around 316. Well, 316, 315. Lowest you're looking at is about 308. And so, yeah, that's what I would be looking at in regards to CrowdStrike. Just a lot going on here. So it's actually right there. So you actually have a supply and demand zone here. There you go. All right, so this will be your supply and demand zone for CrowdStrike. So between 324 and 317, 316, give or take, you're looking at a potential bounce from there if we do head lower or if CrowdStrike decides to do its own thing. So that's what I have in regards to CrowdStrike. I think a good buying opportunity will be at around 320. I mean, not 320, 317. And then from there, we'll see what happens. I know there's a gap right here, but until we break below the supply and demand zone, so you can set a tight stop loss at 317. But from there, we could be bouncing. All right, so that's what I'm looking at in regards to CrowdStrike. If you have any questions, if you agree, let me know in the comments below. If you disagree, let me know. Maybe I missed something. Discord link is in the description below as well. If you want to see how we're going to trade this week, we had an absolute blast last week. We're going to look to do it again this week. And welcome all new members to the Discord. You guys been flooding in like crazy lately, so it's only gonna get better from here. Other than that, that's all I have. Until the next video, traders, you have you a good one.